Well, some say the Fed didn't change their tune with this afternoon's statement. Our next guest is sticking to his guns as well, saying that the U.S. economy is in a precarious position and that the FOMC is more likely to increase QE. Yeah, you heard that, increase, and start tapering. For more, we're joined by Peter Schiff. He's the CEO and Chief Global Strategist at Euro Pacific Capital. Joins us from Weston, Connecticut. Welcome to Market Sense, Peter.
Oh, thanks for having me on.
Before we got back from the break, you and I were talking about the GDP numbers. You said that the revision down in Q1 was enough of a material incident when looked at the slow number in Q2 to make you think what?
Well, first of all, they originally reported Q1 at 2.5. Now it's down to 1.1. So now they're originally reporting Q2 at 1.7. But I think they're going to revise it closer to 0 by the time they're done. But the reality is the only reason the government was able to get a number as large as 1.7 is because they assumed inflation was 0.7 on an annualized basis, 0.7%. I don't believe that for 1 minute. I believe inflation is much higher than that, and if the government used an accurate GDP deflator, we would already see that the U.S. economy is currently in a recession. And again, that's why the Fed never had any intention of tapering. It's bluffing. It can't tell the truth. It knows it's going to increase QE, but it can't come out and say that. So it's trying to build a foundation so later it can come back and increase QE, but it can't let on that that was its intention the whole time because it doesn't want the world to know just how weak the U.S. economy is and how dependent it is on ever-increasing doses of that monetary heroin.
Peter, this Fed has never for a moment been shy about telling people that it was going to throw more money at this issue. Not at any point over the last 4 years have they backed away from QE or adding another a level of QE to the situation. So what would make you think after an election they would all of a sudden assume, if you had any political bias in that statement, they would automatically assume that they could no longer go back to everybody and say, we will keep going on with QE, when it would seem like one of the motivations of both the Fed and the administration has been to give people an uplift in the market and the price of their assets. Why would they change their tune all of a sudden?
But the whole time, the Fed has pretended that there was an exit strategy. The Fed can't pretend that it's QE forever, or the Fed can't let that cat out of the bag, because then the dollar will collapse. Then the bond market will collapse. So the Fed has to pretend that there's method to their madness when there's not. It's just madness. It's the monetary Roach Motel. So earlier on, they didn't have to talk as tough. But now that they've been doing this for 5 years and they've created this illusion that the economy is recovering, they have to maintain the pretense that they can take away the QE. But that's like pulling the plug on a patient that's on life support. But of course, you know, I think we got to get rid of the QE because this is a phony recovery that's going to collapse eventually. And the longer we sustain it with QE, the worse it's going to be when we have to deal with the problems that QE is making worse.
So, but Peter, given the backdrop, though, I mean, you don't think that there's going to be any change at all and that QE continues. So tell me what you think you should do with gold.
You should buy it. I mean, that's why I launched a gold mutual fund last week. It's the first time I've had one. It's a fund that invests exclusively pretty much in gold and silver mining companies. Look, I think the street has got this wrong. Whoever sold gold has made a big mistake. Whoever shorted it has made a bigger mistake, and they're going to find that out when they try to buy it back. But the world's got this wrong. The U.S. economy is not recovering. It's back in recession. It's going to go worse. The Fed is not tapering. They're going to increase QE. Inflation is not tame. It's there. It's going to get worse. And gold's going a lot higher.
Peter, I just want to ask you, when you say that the U.S. is actually in recession right now, tell me exactly what you're looking at. Is it because if you actually had an accurate GDP number, it would be 0? Is that the number? Or is it jobs? Or what is it? I think we just lost Peter. But what a question, right?
He had no interest in answering that question.
Yeah, but
he pulled the plug on himself.
You know what, though? It's interesting because over the past, I don't know, maybe 6 months at least, I mean, nobody's using the R word, Randy Cass.
I wouldn't say, is that the R word,
That's
Randy Cass?
Yeah.
I wouldn't say no one's using the R word.
Not many, really.
I think there is underlying uncertainty as to what is elevating the market, what is giving us this modicum of growth. And some people have the concern that the second you pull away stimulus, we will find that we're back at 0 or less growth. It's not a consensus call right now. It would definitely be a contrarian call.
All right, so hopefully we'll get him back to find out some of those details. But and that was Peter Schiff, who is the CEO and Chief Global Strategist at Euro Pacific Group, and he did join us from Connecticut. Well, still ahead, Talisman Energy released its latest earnings today. We're going to take a look at those results with the CEO right after the break. Stay with us.